Good afternoon and welcome to the presentation, Bitcoin Market Pattern Analysis by Adam Tyson for Full Sail University, April 2018. To begin, Bitcoin is a cryptocurrency. It's an electronically encrypted digital asset, money, designed to work as a medium of exchange that uses cryptography to control its creation and management rather than relying on a central banking authority. Over the last 12 months, Bitcoin's unprecedented growth has become a worldwide investment phenomenon. Some pertinent background in Bitcoin. Prior to its release, there were a number of digital cash technologies for issuer based e payments like eBay and PayPal. But after the market crash of 2008, a group of international hackers began to aggressively pursue a secure form of currency whose transactions would be anonymous and untraceable, and most importantly, not controlled by a banking system. On October 31st, 2008, a link to a white paper by an unknown author under the pseudonym Satoshi Nakamoto titled Bitcoin, a peer-to-peer electronic cash system, was released on the internet. On January 2009, the Bitcoin network came into existence, and thus the Bitcoin financial revolution was born. Despite a lackluster beginning, the momentum for Bitcoin picked up across the globe. And the first sign to the average United States consumer that Bitcoin was something more than a rumor was announced on September 11, 2014 with Wired magazine. Their headline read, Overstock.com becomes the first major retailer to accept Bitcoin worldwide. This began a snowballing trend for many online retailers who neither wanted to keep paying large transaction fees to bank, nor did they want their tax records scrutinized. As of April 2nd, 2018, the list of online retailers includes Expedia, Cheap Air, and even Microsoft. Our Bitcoin market pattern analysis criteria will cover data from April 2017 to April 1st, 2018. It will include the daily market date, the daily price, the daily high, the close, the low, and the overall trade volume. Sources such as NASDAQ, Reuters, and YahooFinance.com are our primary sources, with several others. Our market analysis breakdown of Bitcoin will begin with a historical valuation analysis. It will include a candlestick chart review with strength and resistance patterns, correlation patterns, and a regression analysis. We will then move on to Bitcoin investment movements such as whale trends and Bollinger Bands. After, we will look at growth projections, and we will conclude with a recommendation for buying Bitcoin today or leaving it for tomorrow. As we begin our market analysis, we can see that Bitcoin had a very busy last 12 months. On April 1st of 17, one Bitcoin was worth just over $1,000. It peaked at over $19,000 in early December of 17 and closed at just over $6,000 on April 1st of this year. Because Bitcoin's valuation has been so dynamic over the last 12 months, we've broken down this portion of our study into 4 sequences of significant pattern analysis. Our first sequence takes us from April 1st of 17 to June 30th of 2017. The first visualization we see are stable, strong support and resistance lines that indicate 2 strong buys at 1858.56 and 2125.56. The nice balanced gap between the support and resistance lines also indicate a steady market valuation moving upward. From July through September, we see a rapid price increase, and our strength and resistance line average values double over that time. We have a good 3 black crows indicator of a possible sell, and also at the top of the peak during this sequence, we do have a clear head and shoulders that is an indicator of a longer downturn. However, we are going to find out that it was very short-lived. The period of time for Bitcoin from October through December of 17 was truly amazing, and the primary reason I chose Bitcoin as my market analysis study. The significant findings. There was an absolute rocket increase in valuation of nearly 3 times the value from beginning to end. However, that upward motion makes a support line evaluation difficult. Additionally, a rapid increase produces an equally rapid increase in the resistance to strength sustainability. That increasing gap is an indicator of a bubble. The first quarter of 2018, the value of Bitcoin was in a free fall. As we can see in this chart, several high volume trade days at a loss did show us the destabilization pattern that was occurring. There was a brief correction in February, but it was inconclusive, especially with the inability to evaluate a stabilization line. There is a continued downward trend and a narrowing of the resistance to support values that could indicate a stabilization. And regardless, after all of the loss of value, Bitcoin still closed up 643% over the previous 12 months. Our correlation analysis of Bitcoin looked at the closing value to other independent variables. The strongest correlations we found were the days high to closing value to days low to closing value. This was not a surprise. Our mid-range, the opening value to closing value, and also the daily high to low value. On the bottom was the close value to trade volume. Our regression analysis of Bitcoin gave us an R-squared evaluation of open, close, high, and low, equaling a 65% relational strength to the linear regression. However, the p-value of trade volume does indicate an unreliability in the data. The next portion of our market analysis will look at Bitcoin trend patterns, starting with whale watching. Whale activities are buy and sell activities that are indicated by a 10% valuation variance of buying patterns. This usually means an investment house or big players or big money institutions are taking an interest in that particular market. This can be good, this can be bad. It is also an opportunity for us to make money. The most common way to identify a whale is to look at the trade volume. However, looking at this chart, the 10% variance in the day-to-day volume is all over the place with Bitcoin, effectively nulling the whale identification in this manner. With our trade volume so high, we can look at closing price indicators for evidence of whale tracks. In our case, we have many with Bitcoin, at least 19 instances of whale sells at the green line and at least 10 instances of whale buys at the red line. Overall, Bitcoin was getting a lot of attention worldwide, and it showed. Digging a little deeper into our whale track identification, we're going to overlay our closing price chart with our overall stock chart. What we find is that our whale track identifiers are not as pronounced as we previously thought. Therefore, it's always good to deep dive this investigation and really do look for those trends and patterns, especially when considering something like whale tracks as an indicator. Next in our trade patterns is our Bollinger Bands analysis. Bollinger Bands are volatility bands placed above and below a moving average based on the standard deviation of a normalized bell curve. The bands automatically widen when volatility increases and narrow when volatility decreases. For the Bollinger Bands, they operate on the 95th percentile, meaning that they are placed at 2 standard deviations above and below the moving average. This gives us our buy and sell parameters. Our first sequence of the Bollinger Bands analysis covers April through June of 2017, a period that we've already looked at previously. But first, let's look at what the Bollinger Bands measure here. Our 20-day moving average is in blue, and our upper and lower bands at 2 standard deviations below and above the moving average are notated by the gray and orange respectively. Most importantly, we then have our yellow line, which indicates our daily close value. Where that close value is crossing the upper band lines, those indicate a sell. Our second Bollinger Bands analysis from July through September of 17 gives us our first clear indications of buy and sell points. It's also important to note that although there was a lot of growth, a lot of activity during this time, there really are only three distinctive points for buy and sell. Looking at our third Bollinger Bands analysis sequence from October through December, we can see our sell point from the previous sequence. Also, we'll remember that this particular sequence was also a time of great and fast upward mobility. Therefore, no buy points. Our fourth sequence of Bollinger Bands analysis is first quarter of 2018, which of course we remember was a free fall. What we see is the complete opposite of the previous sequence. We have a buy point with no sell point. Once again, our Bollinger Bands analysis gives us the volatility index to really provide us with concrete buy and sell markers. In this particular case, and unlike the other analysis, this is going to show us that our Bitcoin is not that reliable. The projected growth of Bitcoin over 5 years in a linear trend would put us at a very healthy $25,000 per Bitcoin as of April 1st, 2019. This is a very strong, considering that right now we are at $6,000 per Bitcoin. Again, digging a little deeper, our Bitcoin forecast, which adds confidence intervals to the equation, gives us a 5-year forecast of $37,500 high to a negative 4,011 low per Bitcoin per April 1st, 2019. Our Bitcoin recommendation is do not buy. The high volatility makes it an unreliable investment at this time. There are poor entry and exit indicators for buy and sell, and the lack of lasting discernible trends make a long-term investment in Bitcoin not recommended either.